Well, hello everyone, K Kim here from the Traders Club, and thanks for tuning in for another week of midweek update here. Hope you guys are enjoying your week thus far. And well, the market continues to see a lot of volatility here. And so what we're going to do today actually is we're actually going to look at each individual indices. And we'll look at Dow Jones and NASDAQ, S&P 500, and the Russell, and see, let's ascertain what the sentiment is like today, what is likely to be. Obviously, we have to keep in mind that we have to understand the minor term, intermediate term, and primary term. So I know that this is a level. I mean, I've been meeting a lot of people, and a lot of people have comments on the market. But it's interesting to note that most people think that this is a very, very fearful market, and this is where most people are very, very not confident. You know what's funny about that at all, though, is this: when the market is trending higher, and the market is, and people are fearful because they're just gonna get a correction, right? And then when market actually comes down, then people are fearful that it's actually going to go, go to nothing. So it's an interesting psychological, sentiment that people fear that it's gonna roll over when it's going up. And then when it actually, because people want hey, I want market to pull back so I can get in. And then when market actually does pull back, people are fearful that the market is actually going to crash, right? So you have to make your decision what you want to do here. And then one thing that, I look at this as opportunity. Obviously, we're still working with very, very important levels here. Obviously, we're still dealing with certain type of sentiment and pattern in the market that could result in a much steeper correction. However, as of today, we still don't have a full reversal confirmation of that yet. So first thing is first, I always do this on every single video, that we must understand the primary term uptrend, right? Where are we coming from, right? So if I just go back here, we had a 2008, 2009 market crash, and we bottomed right about here in 2009. And then, if I just go something like that, we are in that primary term uptrend still. And you could say, well, okay, we gotten below that uptrend support. Does that mean that there's a high probability it's going to continue lower? One thing about it is that we shouldn't focus too much on these uptrend support level. This market is not going to respect it perfectly, right? I mean, if that's the logic, that if we break the support and this market should go to nothing. Well, last time we break well below, this was 2011 July. We have broken well below that support level here. You can see that this was support here, and then we hit that support right there. We broken that support, and this was actually, I remember there was a lot of fear in the market. I remember that, and this was, a lot of people are saying that this can come back to about 9,000, the Dow Jones, and possibly even do something like this and have some kind of a massive head and shoulder formation and go to nothing. And so there's always people saying stuff. So, and obviously, even though we have cleared that or broken below that uptrend support, what it did was it created another uptrend support. Why? Because we're still in a primary term uptrend. What does that mean? We're still cultivating primary term higher lows. That low is obviously higher than this low, which means, what is the definition of an uptrend? Higher lows and higher highs, right? And that works in a minor term, intermediate term, and primary term. So when you're gauging in a primary term perspective, that is very, very important that you understand that fact. So obviously, when we're looking at this market here, when we're looking at Dow Jones here, looking at a primary term, obviously you can see that we're still cultivating. We're still in a primary term uptrend. Let's not forget about that. Let's come back. Let's get close here. Let's zoom in here and see what's going on in the intermediate to minor term. Obviously, in the minor to intermediate term, we are in a downtrend. You can see that there's a lot of fear here. We hung around on the Dow Jones for a while. This was a level that a lot of people are watching. As soon as that level broke, we just tanked. You can see that in 2-3 days, just a massive fear and panic in the market. And then we came down to somewhere about here. And this market, a lot of times do this if they'll make a slightly lower low, because this was support here. This market loves to keep that in mind. This market loves to play with your heart, right? Don't you hate when women do that? Play with your heart. Hey, guys do that too, so I'm not being sexist here, but we do that, and market loves to do that, right? What they do is that they will put in lower low. thinking that this is some kind of cultivation of a downtrend, and then it just completely fake you out and then reverses back up. Am I saying that that's exactly what's going to happen? No, that's not what I'm saying. What I'm saying is keep that in mind, that that kind of shenanigan can happen. So looking at this here in a price action, as far as what's happening, last several weeks or so, we are in a downtrend, intermediate term to minor term. The level that we're looking at is right here, right now. We got two levels here on the Dow Jones, 17,200, and then 16,786. Those are the level that you really want. If you're a buyer here, if you're an investor, you really want the market to continue to the upside. What you want to see on the Dow Jones is, probably want to get above 17,200 level. But the next level of resistance will be 16,767. You can see that 50 EMA here, that pink dotted line that has been acting as resistance here. And ever since then, we threw that after Fed minutes few weeks ago, investors didn't like that. And then they started exiting, and then you can see the 10 and 20 EMA just acting as resistance there. We saw slight, if I go to micro term, what we have is that we have potentially a morning star reversal. If you look at this as an evening star, again, micro term, right? This was an evening star, right? We had that, bullish move to the upside. We had that shooting star candle right there, right on that 50 EMA. And then we saw that follow through. This was an evening star reversal, tower reversal, whatever you call it. And then we saw follow through, and then we threw a little bit of spinning top, and then we saw follow through today. So we could potentially be seeing some kind of a morning star reversal in the minor term. And obviously we'll need a follow through after that. What we want to see is, let's say if the market continues higher tomorrow on the Dow Jones, and then if we start to get above 16,426, I can forecast that, and then after that we'll probably come back up here 16,767 again and kind of retest that 50 MA coming down, and then we have to see how it's going to react to the resistance level going into next week. However, anywhere below 15,989, you can expect that we'll probably come back down to $15,710 level, and those are the levels you want to watch this coming week. And so let me actually go to S&P 500 here quickly. S&P 500 is very, very similar. It's almost identical. If we just look at micro term, minor term, intermediate to minor term, it's whatever I said on the Dow Jones. It pretty much same here. Basically, what you want to see is 2,000 level, right? 2,000 level is what you want to see, and obviously, really above 2,050 is a level. If you're an investor, if you're a buyer here, above 2,050 is the level that you're going to see buyers coming back and really re-stabilizing this market once again. We do have, again, we had an evening star reversal right about here. We have a formation without a confirmation. We have a formation of what? Morning star reversal. So if we can continue higher, probably if we can stay up and close above $19,035, $19,035 level next couple days or so, then I think I can forecast it. After that, we'll probably get up to about 1998 again, right? That's the level when we're gonna kind of retest that 50 MA level. So we're probably gonna find some intraday resistance here right on that 10 MA. You can see that the 10 MA did act as resistance here and here. Once we gotten above the 20 EMA, we fell back to a 10 EMA acting as a resistance here. And obviously not everybody watches 10 EMA. People always ask me, well, why is these moving averages work? Because not everyone's watching these moving averages. What the moving average is simply saying, we're simply conveying, is that there are short-term traders, there are short-term people. They are just kind of by their instinct, once we get a little bit of pop, they'll sell. That's what the 10 EMA is saying. It's a very, very minor, very, very micro-term people. Just as soon as they get to a 10 EMA, they'll just sell. And so that's the reason why the 10 EMA continues to act as resistance here in the short term. And that's true for any kind of pivot level, support level, resistance levels. It's not that everybody's watching these resistance, support, or pivot levels. It's just that people in their feeling, a lot of people, most people, you'd be surprised. Most people just go with their feelings, go there with their instinct. And that's not how you should trade this market, but most people do that, right? And then once they feel that there's certain pop, and then they'll either buy or sell. That's how it creates a pivot level, resistance level, and support levels, right? Until it breaks. Anyway, so Looking at a minor term here, obviously we got something cooking here. However, we first things first, we probably gonna see 10 EMA as a rate acting as a resistance, 1927 intraday resistance, probably tomorrow. In the next few days, you probably wanna watch out for that 20 EMA here, 1946. But ultimately though, if we start get it going here, then probably the morning star reversal, at least in a short term, will probably gap back up to 19,994 level on the S&P 500. Again, looking at a more of a major primary term uptrend perspective, you can see that we're still in a primary term uptrend here. So definitely, as far as saying that this market is getting to a crash mode, we really still need to give benefit of doubt to the buyers once more until at least above 18,000 level, right? And that's kind of what happened last time here. Right here you can see that was a support level, that was a horizontal support here. I recently wrote an article on this several days or a few days ago, and you can see that we got horizontal support and rising uptrend support. Again, not everyone's watching these pivot levels or support levels. It's just there are people who bought at this level back in 2011. They made a lot of money and they remember this. People tend to remember dramatic situations. Think about your life. You remember when you're very, very happy, and you remember when you're very, very sad, right? Or very, very angry. People remember this day. Why? A lot of people either got burned and they're pissed off, or they made lots of money buying into fear here, and they remember that. Do you think those people are watching this level? Of course they are. Of course they are watching here. Again, psychologically, that's what they're doing. You know what I'm saying? These guys are watching this level. These guys are ready to put some more money in because they made a lot of money. Also, there are people who got really, really pissed off that they start short selling here and did not work out. So then they remember this because they're very, very pissed off back then, right? Dramatic situations in life. And so then they're thinking, you know what? Last time I tried to short this, it really didn't work out back in 2011. So right here, I'm going to watch and see what it does. And then maybe I'm going to buy this time. And this is a reason why the pivot levels, support levels, and moving averages work, because of this psychological sentiment that I just explained, right? So let me go to NASDAQ. And NASDAQ is the strongest index of it all. You can see that obviously looking at a major primary term, really this is kind of a more like it here, and you can see that we're kind of still in this rising uptrend support here. We what could be possibly consider kind of a concerning signal on the NASDAQ is that we have now created, primary term lower high, right? And so that's a concerning signal. However, this lower high, it is not going to be confirmed as lower high until it makes a lower low. Again, what is a definition of a downtrend? Lower highs and lower lows. So if this is going to become a lower high if this thing comes down and create a lower low. So you can see that obviously we did have the shooting star affected this market and tanked here for about 2 weeks, and then it looks like it's possibly trying to get back up in a minor term. However, you can see that there's still a lot of selling pressure here, so this can be perceived as possibly bear flag. I'm not sure before going to continue lower, or are we going to just go right back up here? We do have gap right on this on the NASDAQ right here. Let me just check. Let me mark this for you guys. 4,835. $4,835, there will be gap area, so that level can be hectic here. So if we start, and there's another gap here. So there are two things. When there's a gap area and then when the minor term sentiment changes, the whole thing about this is when the minor term sentiment changes, when it reverses, this isn't going to gravitate towards this. The bulls, what they want to do is at least go up and fill these gaps. And these gaps can act as resistance once it's filled. So keep that in mind there. So we got something cooking here. Not sure what's going on as of today. Again, it could be a bear flag or it could be a reversal. But if we start to see that 10 EMA getting reclaimed, claimed, then I think I can perceive that we might get back up to about 4,839 and retest that 50 MA. Again, that 50 MA act as resistance here, shooting star. So when it gets up there, it acts as resistance. Why? Because people who short sell here or buy some puts or sold their shares, they are doing it again, right? At least in the minor to intermediate term. So that could be perceived as a resistance area. Anywhere below this level on the NASDAQ 4,500 level, you can perceive that it will come back down to 4,347 at that point. But if this thing continues lower from this point on and get below 4,300 level, I do think that NASDAQ is now going to start to look pretty unstable here. Could potentially be kind of a lower high and lower low, some sort of inauguration of a downtrend. Again, as of today, we don't, but this market sometimes is going to do stuff like that where it's going to make it look like it's going to have some kind of a downtrend and then reverses back up. Good example of that is right here. This was back in 2011, and this is an example that I use on the Dow Jones analysis I did. You can see that lower high. Do you see that? And then you see that lower low. And then we throw in right there, which perceived to be, here's a lower high, lower low, another low, right? You can see that that's a support level. It looks like there's another low, and looks like this is going to continue with the crash. But then, however, it just reverses right back up, right? It creates a higher low and higher high. So this is a very, very important that you understand this, that here what could happen is, the worst case scenario for the bears will be that this thing comes down and looks like it's going to come down and kind of fake you out, kind of traps all the bears, and then it reverses back up, just like we've seen back in 2000. I just gave you that, example there. And that's the market is designed to do that. It's gonna fake you out. So you gotta be very, very smart. You gotta be very, very sharp. You have to be very, very sophisticated when we're dealing with this kind of market. There's a lot of fear and greed that we're working with here. And so, obviously as of today, it's difficult to say if market is going to indeed get a steep correction, or is this going to be an opportunity for many people, many traders, investors that could buy low and then ride another uptrend to the upside for the next year or two, right? Russell 2000 actually made lower low today, okay, right there. You can see that. And so Russell is looking at an intermediate term. It is perceived to be a much, much weaker than any other indices that we just looked at, because we have lower highs, we have lower lows, right? We just create lower low. Again, that potentially be a bear trap. I'm not sure though at this point if that's what it's gonna be, but looking at a more of a primary term perspective, you can see that we're still dealing with kind of rising uptrend support here. Right? Again, if you want to kind of compare this to today's movement with 2011's correction, that's what it's gonna do. Look at this. Look at that. It's almost pretty identical here. Well, it's a little bit different, but we kind of got a slightly lower high here and then a lower low. And we got another lower high. And then we create another lower low. You can see that we're in some kind of cultivation of a downtrend here. Looks like this is gonna go and at least come back down to about 600 level here on the Russell 2000 back in 2011. And then it traps all the bears here, and then it reverses back up. I mean, in time. It didn't do it in one day, but in time. Let's go back today. What's happening here? You see that? Do you see that? Am I saying that we're going to have exactly the same way, it's going to play out exactly the same way it did in 2011? No, that's not what I'm saying. It's just that you can learn from this market, studying the past behavior so that you avoid a certain shenanigans, certain head fakes, certain setups, so that this market don't tear your heart out, right? And so, So we just looked at all the indices. We looked at Dow Jones, S&P 500, NASDAQ, and the Russell. And here's what I'm saying is, if I just look at the price action, I'm going to dictate the price action to where the market is going. And this is what I have to say. I have to say the primary term, we're still in an uptrend without a clear signal that it hasn't reversed. It has been reversed. However, NASDAQ is the strongest index with the certain concerning signals. However, it's not there yet. We have Dow Jones, S&P 500 also potentially concerning signal, but it's not there quite there yet to assume the whole market is going to crash and we're going to have a steeper correction. Russell 2000, obviously we're cultivating some lower highs and lower lows, which we talked about right about here. The biggest question is, are we doing something similar to back in 2011 before going higher? Again, back in 2011, we did close below that uptrend support here, guys, and this is where a lot of people thought that it's going to continue lower. Again, sentiment of the market, the psychological level of traders, investors, people who bought up here, this is a very, very dramatic, a level of this life of this market. People remember 2011. Again, people were pissed off because they couldn't make money shorting it. People are very, very happy. They bought it at this level and they made a lot of money. Those people, or people just watched, didn't do anything, but they just remember that it did this. Those people are remembering that and they are watching it right now. Doesn't mean that we're gonna have massive buyers in this level, and this market is gonna go to the moon. And I know this for sure. I'm not saying that at all, but I still want to give benefit of the doubt to the buyers in the primary term. Obviously, looking at the intermediate term and the minor term, the sentiment is bearish. Again, minor term, intermediate term, sentiment is bearish, which means we might have pops and stuff like that, but it's gonna be quickly sold off, or it's gonna be quickly met with the sellers, and you're probably gonna see a lot of volatility in the intraday, so keep that in mind there. But I think what we have to do is we really have to wait for confirmation if the whole market is actually gonna reverse or not. So let's watch that and see what happens next week. I'll kind of cover that again and see what happens there quickly here. Let me look at Apple. We've done enough long-term analysis on Apple here, so I'm not going to go to that. But obviously, Apple is right now found some resistance right about, again, that 50 MA, right? The 50 MA just was that kind of a wall there, just was not able to gap back up. If we go to line chart here, you can see that this was a resistance level. You can see there, and then we're pulling back. And so the question is, we do have a little bit of just right on that. It's not a textbook. But what we have is that we potentially have some kind of a bullish Harami. It will be more like a true bullish Harami if the doji was a little bit higher, like a 50% of its previous candle. So it has a sentiment of bullish Harami, potentially be maybe even bear flag before going lower. Bear flag really never worked out for Apple recently though. So I really, at this point, I think it's really 50-50. 10-20 MA acting as resistance, 50 MA there. So if we do bounce back up though, and then get back up above 116, this could potentially be some sort of inverted head and shoulder, but we don't know that until we see price action above 116. I think above 116, 117, I think the buyers really gonna show up there. But sentiment, the minor term sentiment is definitely bearish. We still have these moving averages turning down. We still have the resistance there. We just have that cross there on the primary to moving averages there, like the 100 SMA, 200 SMA. So that's a concerning factors. But again, the price action is always the king when it comes to dictatorship of the direction. So we really have to see what's going to happen here. I think we're finding some support at 108. So buyers, any minor term buyers, really want to see this level hold. If this level does not hold, I think the next level support will be about 102. But if this level hold and gap back up here, 116 is another level resistance. We start gap back up here, and after there will be 120. Above 120, you're gonna see a lot of buyers start to see confidence and then start to accumulate some positions at that level. Obviously, again, we're still dealing with, if you go to line chart, these levels line up. We're still in the uptrend support there. So I mean, there are certain levels that if we just look at past behavior on the Apple. You can see some of those levels. I mean, these levels are likely when you're gonna start to see some buyers, kind of attracting buyers, because the smart investors and smart traders don't want to start buying when the apples are starting to soar, right? What they want to start buying is when Apple starts to pull back. But when it does pull back, especially when we had this sharp pullback, there's a fear. Is it a pullback or is it a crash? Right? So that's something that, you know, we need to ascertain and make sure what it is before we can able to kind of make our decision there. Let's look at Tesla real quick. Again, you know, I like Tesla a lot as far as, you know, the company, the CEO and the production, the car. I really liked it a lot, and so I like watching Tesla. I'm not in Tesla at this point, but I think Tesla though starting to look possibly attractive, maybe above 267 here. Look pretty similar in the minor term to intermediate term. Potential, you know, looks similar to Apple as far as the price section is concerned. Very, very similar to Apple there. I think anywhere above 270, I think there could be some good, you know, the buyers starting to see some opportunity there. Potentially after that, you may see, you know, price gap back up to 286. Anything above that, you could get up to 250, 240 or so. However, you know what I'm feeling iffy about it is, you know, I wonder if we're just gonna stay here and start to like kind of channel it out, because it doesn't, to me, as far as a price action is concerned, that doesn't seem like a very stable uptrend to me. So it's just a bit iffy for me. So that's why I've been kind of staying away from Tesla since I traded this here. I've been just kind of staying away. You know, I'm not sure at this point, but I wonder if we're gonna kind of stay here for a while, kind of up and down. And so that's kind of what I'm thinking there. And I guess we'll just have to keep watching it. Google's are doing very, very well. I really like Google here. I've been saying this. I think if market stabilizes itself, I think Google's $800 stock, even maybe higher. They might even do a stock split. I'm not sure at this point, but you know, you can see that, you know, once we clear these major levels, you can see that this is where this is what I'm saying is this is kind of thing that potentially Tesla can go through. You know, kind of you know, channeling it out, and once they break out, that's kind of when you want to get into Tesla, right? So you see that Apple did this for several years. It's just kind of stuck there, and I'm guessing that Tesla might be doing that. Anyway, so we got out, and then you can see that we had a huge bullish move, and then we had another thing. We kind of stuck here for a little bit, and we got out here, kind of retesting that old resistance as a new support. And I think that you know, once the market stabilizes itself, I really think that you know, Google's going to do very, very well, and we're still holding Google since, you know, early this year. So I think Google's gonna do it. And lastly, I'll look at a utility sector before I let you guys go. I know I wrote an article today, and I show you guys this chart here. I'll just reiterate. You know, the chart or the article title is, what is that? What is that called? Dang it, I forgot. I wrote it today and I forgot. Argument from the bears and the bulls on the utility sector, on utility sector, right? That's what it was. Yeah, argument of the bears and bulls or something like that, right? So obviously, here's our argument. Here's our argument on both sides. So bulls are going to argue, hey, we're still in a primary term uptrend. We got higher lows and higher highs, and we're dealing with a very, very strong pivot level. You can see that it's strong pivot. What does that mean? You can see that it acts as resistance, acts as a pivot, acts as support and resistance, a pivot, right? It changes direction when it hits that pivot. And also you can see that rising uptrend support. This is again very attractive level on the utilities. Again, smart investors, smart traders are going to start looking for opportunity right now. They want to buy it down here. They don't want to buy it up when it's going up. They want to buy it when it pulls back. So always, but here's the dilemma though, always. Everybody wants to buy it when it pulls back, but when it pulls back, they're scared to go in. And then when it goes up, they're scared it's going to pull back. And they never pull the trigger, right? You guys know what I'm talking about. So what's it going to be? Are we going to bounce on the utility sector here? Or, again, that's a bullish argument. This is a great level that it can continue higher. This is a bearish argument. Last time, 2007, 2008, we threw that head and shoulder formation, confirmation right here, tanked. We have same formation, essentially just right on that. And where's the confirmation level? Right here. If this thing gets down here, there's a good chance this thing can also tank. I'm not sure if it's a tank all the way down, but I mean, you know, possibly even 35 or so before kind of getting back up, or even possibly about, you know, 31 or so. So at this point, we don't know. So this is an important level to watch. This was what I was talking about here in the article, and so I definitely like watching utility sector here, and I want to see opportunity to possibly go long or short, but I'm slightly leaning towards the to the upside. I know I've been advocating that I am, despite of what the market has been doing, I'm still leaning towards the market stabilizing itself and then getting back to its uptrend, right? And that's my opinion on it. But again, we let the price action dictator, be dictate on that, right? So as far as today's concern, obviously the market sentiment is bearish in the minor to intermediate term. Micro term, we got something going there with the today's pop, but without a follow through, it might mean nothing. So we really have to want to watch next couple more days. So next week, Wednesday, tune in, and then we'll look at we'll do a follow through on that and see what happens on the market, and we'll go from there. So have a great night, and we'll talk to you guys next time. If you have any questions or any comments, feel free to use my blog to leave any comments there, and I always reply.